My name is James Young. I'm the director of the Washington Center for Real Estate Research at the University of Washington. And I guess as co-host and co-presenter for today's event, I'd first like to thank Fannie Mae for the partnership in putting this event together. And I think the agenda is really, really good. But I think as a background, I think we need to kind of think about how universities have traditionally been at the forefront of innovation in society, and the technology we use today, like the phones, the cameras, everything we're using up here, a lot of it is a result of innovation that was born through partnership with industry pioneers, with universities, with research centers, and with entrepreneurs. And I think the focal point of today and today's job, and what the Washington Center for Real Estate Research tries to do, is to do industry-facing research that is important. Industry-facing research that brings ideas and people together. And like those tech pioneers, I think we at the Washington Center for Real Estate Research jumped at the chance when Fannie Mae said, hey, we can bring the industry partners together and have those sorts of discussions so that we can bring the same types of discussions that we had in the technology sector and building what is a great infrastructure to affordable housing. So I'm really excited about today's program, very excited about it. And so at first, I'd like to introduce our first industry panel of the morning. I'd first like to introduce Steve Franks, our moderator with Washington Realtors. Quinn Hawkins, who's head of Redfin now, is one of the innovators in terms of the iBuyer experience and selling real estate. Tyler Baldwin, who is the Chief Revenue Officer with Reali, who try and streamline the buying experience and offer a bespoke service in terms of the concierge type of experience. And Spruce, who is looking at online transfer issues and making the transaction process faster, as well as Terry Theologides, who's the the General Counsel for Fannie Mae. I'd like to thank you if you could give him a warm welcome.
All right, thank you, James, and good morning, everyone. Welcome to Seattle, welcome to Washington. I am the CEO of the Washington Realtors. And before we jump in, I just wanted to follow up on a couple of things we heard from our first distinguished panel. And what we've been hearing all morning, and I think what we'll hear all day, is that fundamentally the problem that we're facing is a supply problem. What we need is more housing of all kinds at all levels. And so we heard a little bit about some policy applications. So I can tell you that at Washington Realtors, we care very deeply about housing affordability. And in fact, in the last legislative session, we took the lead in forming a coalition, a very broad-based coalition of builders, lenders, nonprofits, advocates for the homeless, that we called the Unlock the Door for Affordable Housing Coalition. And as a result of that, our legislature in the last session stepped up and passed something on the order of a dozen very significant bills that directly address housing affordability, not just in Seattle, but in all of Washington. And that ranges from everything from finding additional funding for our most vulnerable populations to, very importantly, to condominium liability reform in the state of Washington to open up that access to housing and again, building on what we heard in this morning's panel, incentives for local jurisdictions to increase density. So a lot of that is moving forward. Things are happening on the supply side, but that will take a little bit of time to work its way through the system. So what we want to talk about this morning is, in the meantime, focusing on the transaction. What are some innovations, some applications of technology that might be streamlining the transaction a bit, wringing some of the costs out of it to make housing more accessible and affordable, again, across the income spectrum. And one other observation, and then we'll jump into things, is I've been doing this for about 25 years. I've been in the industry for a long time. And one thing I know about real estate, it is highly competitive. And there are always new ideas, new innovations, new technologies, new models that enter the industry. And people adopt, people adapt. Some work, some don't, but things move forward because the industry is all about innovation, and it's all about the consumer. So with that, let me just kind of throw things out to you, and let's just have a conversation to the extent we can. But just tell us a little bit about what each of you are doing and how that is using technology to achieve some of the results that we just talked about. So Why don't we start with Reali? Why don't we kind of jump in? There we go.
All right.
Sure.
So my name's Tyler, and I'm the Chief Revenue Officer of Reali, which is a tech-enabled full-service real estate brokerage based in the Bay Area. And essentially what we're trying to do is disrupt the existing model, but by putting the consumer first. We're leveraging technology as a key tenet in that disruption, but it's not just technology. It's a business model disruption. It's a financial engineering disruption. And what we're trying to do, our ultimate goal is to make the home buying and selling experience simple, stress-free, and affordable. That's really the goal. It's not to put more money in the pockets of our agents, although we do have agents and we want to make them personally successful so they can buy a home themselves or sell a home themselves. But ultimately, we're trying to create a better consumer experience. So the way we're doing that is multiple. One, we have consumer-facing technology. We have an app that customers can see the entire customer journey from finding a home through the escrow process, and they can chat with people in our back office, so they get real-time updates 7 days a week. It enables them to provide give more transparency, understand the nature of their transaction. We're leveraging other technology. I came out of technology. I actually was at LinkedIn, worked at Microsoft previously, worked in consulting, and we're taking a lot of the technologies in B2B and B2C into the real estate industry to actually make our agents more efficient. So we're deploying technologies that are commonplace in other industries that have not really found a footing in real estate to make our agents more efficient. So as an example, one thing we do, our agents on average do 5 to 6 transactions per month versus the average producing agent at a traditional brokerage is less than 1 per month. So just by employing more efficient technology, a more efficient business model, we can actually enable a much more efficient process and then give those savings to the customer because we have a flat fee, we have rebates, so significantly reducing the transaction.
So we talked about having access to the agents. How about finding the property? So Quinn, you want to talk a little bit about the iBuyer model and bring people up to speed on that?
Yeah, sure. Thanks so much for having us today. This was a great homecoming. I grew up in Seattle. I went to the UW, got my master's there. I worked at Microsoft before Redfin, so it feels like, I live in the Central District, so it feels like it's all coming together.
There you go.
Redfin got started in 2006 here in Seattle. Great time to start a real estate company, right? But we did survive. And the first thing was really to bring transparency. So when Redfin started in Seattle, if you were a consumer, you couldn't see where homes were on the map. And that sounds commonplace now, but that was the first thing we did. And then we hired agents, paid them a salary, and then a bonus based on customer satisfaction. We're now spread all across the country, so we're in every big city. And we've started a mortgage company and a title company, and then RedfinNow is kind of the newest venture. And so with RedfinNow, we looked at how can we really help sellers, because we want to help sellers and we want to help buyers. And with sellers, mostly we focused on price. It's one of the biggest friction points. So in Seattle, you can sell your house with Redfin. You pay 1% versus the 3% traditional, and you can save a lot of money that way. But sometimes people really value convenience and speed. And so we're meeting some of those people who said either, I found this property, let's say in Boise, new construction, I got them to sell my house in the next week. And even if you're a really good agent, it's really hard to sell a house in a week. Or you meet somebody else and they're like, hey, I've got 4 kids, 2 big dogs. I'm gonna have to do showings and open houses. That sounds really hard. And so with RedfinNow, you can actually get a cash offer directly from Redfin, where we will come, we'll inspect your house, we'll check out all the major systems, and then we'll actually close with our cash. And so people get to pick their closeout date anytime within kind of 7 days to get us to go through that inspection process, and up to 30 further out. And then they can rent back the home a little bit if they need that extra time to move to their new place. We charge a 7% flat fee for that, so it's a lot more expensive. And it's really for those folks that are valuing that convenience and speed, and sometimes that opportunity cost. So you're paying more to sell your house, but if you get that new house at a great deal, or you are able to move or not put your family through all that stress, people have found that that's really valuable. So Redfin's really committed to offering those 2 options. We'll list your house for 1%. That's the way to get the most money. Or you can sell for RedfinNow, where you're really opting in for convenience and certainty. And we try to get everyone to meet with both of us, where you really understand what you can get for your home on the open market, and then also what a cash offer looks like from Redfin.
Okay. So we talked about finding an agent, finding a property, then we start getting into closing, finance, title exchange. So Patrick, why don't you tell us a little bit about Spruce?
Yeah, thanks. My name is Patrick Burns, co-founder and CEO of Spruce. Unlike Quinn, I wasn't born in Seattle. Born and raised in Scotland, but I do have in-laws now in Seattle, so it's a second home in the States. We started Spruce in 2016. Now, this was at a time when a lot was happening in the real estate industry and real estate finance industries. Companies were either starting to offer new kinds of transaction experiences in response to consumer demand for a more convenient experience, a more affordable experience, new ways to access home ownership or equity from their home. And we realized that traditional title and escrow companies with their traditional business models, their traditional distribution models, their traditional ways of thinking about risk in a transaction were going to be a huge impediment to those kind of changes, these kinds of offerings, and an impediment to consumers getting access to those kind of offerings. So we started Spruce as a technology-enabled title and escrow company, where we see ourselves as partners to these real estate companies, these mortgage companies, or some alternative new models, where we can be enabling the kinds of experiences that they want and they want to offer to their customers. So how do we do that? Well, first of all, we start with our own technology, or technology that we use to process these transactions. We create standardized data structures. We create standards that we can then expose to our institutional partners through APIs that we can turn into digital product that we expose to home buyers and sellers and borrowers. And at its core, at least from the customer perspective, it's about empowerment, which looks like convenience sometimes. It looks like cost savings other times, right? We talk a lot about affordability, and you don't have to be hugely underwater to not be able to move homes. When you think about the transaction costs, right? Many of these middle-income people living paycheck to paycheck, as a majority of Americans do, the prospect of coming up with $5,000 in moving costs or title costs, or these frictions that get added in by the 5, 6, 7, 8 gatekeepers in the transaction, can go from someone that thinks they're doing all right to actually you're in a lot of bother. And so we look to work. We get really excited about new models or forward-thinking companies in the mortgage and real estate space looking to offer lower cost, more convenient, more scalable experiences to home buyers and borrowers.
Okay. So Terry, from the perspective of Fannie Mae, so you're seeing the big picture all around the country, not just limited to Seattle and Washington. What are you seeing, and what are you seeing in terms of consumer adaptation of these technologies?
Well, we're excited by what we're seeing, and there's almost no space in the home purchase or home financing process that we aren't seeing some degree of disruption and digitization. We aren't typically interacting directly with the consumer. Our customers are the lenders, and we're also responsible for ensuring that private capital continues to flow into single-family and multifamily housing. So people see us as a risk manager that will keep those spigots moving, even as innovation and adaptation is occurring. What we're seeing is an insatiable appetite for data, for information, which in a lot of ways is a precondition to do a lot of what you just heard up here. So one area we've spent a lot of time is information about the property itself and standardizing that information. So we created the uniform appraisal data set and have made available tools that help the ecosystem to have greater visibility into the property for wherever you are in that value chain, all the way to the consumer, but also to ensure that there's the opportunity for streamlined appraisal processes informed by that data. So we feel that as a standard setter and using the data that we have available to us, we can help essentially grease the wheels for the innovation that's happening more sort of on the ground. Another example is a lot of the transaction process involves information coming from one source, being checked by somebody else, and flowing through the whole process. We've innovated something called single source validation, where instead of getting 3 disparate sources of income, employment, and asset information, and then have to validate each of those sources independently, we collect from the actual source, like the bank accounts, through an intermediary, data that we can rely on because it hasn't sort of been passed through a daisy chain where it could have somehow been corrupted. And that streamlines our ability to validate that information for the risk management, for capital to flow, and it also allows the origination process to happen more quickly.
Some of what we've been talking about is, let's call it the back office use of technology and kind of streamlining how you guys get things done. Let's focus back on the consumer again. So we talked, and our initial panel talked a lot too about the importance of opening up housing opportunities for that missing middle, right? The firefighters, the nurses, those sorts of things. What about our more underserved populations? So those who might not have the access to technology. Talk a little bit about the interface between the transaction, the closing, and those populations. What are some of the opportunities that we see for innovation to help with those underserved populations? Let us throw that out.
I think one of the opportunities is actually just not even giving people access to technology, but it's lowering the barrier to entry to actually even getting into the transaction. So as Patrick was mentioning, there are the cost. There's 7, 8, 9 different providers as part of the home transaction. When you do title, escrow, home warranty, home insurance, the inspections, it's the average cost of a home transaction is 10.4%. Across the nation, which is insane. Name any other industry where you're charging 10.5% just to get to execute that transaction, and then put that in context with the average person puts 20% down, which represents in many cases their life savings. Half of that is going to transaction fees. So the consumer, these underserved customers, can't even get into this because they can't, putting them $5,000, $10,000 in these transaction fees is so prohibitively expensive that they actually can't even get there. So it's incumbent upon us as we're reinventing this experience is how do we actually take that 10.5% and cut it in half to 5%? That actually will provide more accessibility to these consumers. So obviously we need to make sure those people are accessible or they can reach us, and we have phone, like everybody has a phone, they can talk to us through phone and traditional means, meet agents, but ultimately to make home ownership more affordable, we have to solve some of the systemic issues.
Okay. Yeah, and I think so cost certainly a huge factor. I think education and empowerment, I think, is another large one, and that often takes a simple form, but it involves a real sort of rethinking of the traditional infrastructure of a real estate transaction. So when traditionally you have the title company, the mortgage broker, the real estate broker on Main Street, putting together this transaction, you're operating at very low scale, and so you're limited in the expertise and the optionality that you can provide to people. One of the things about our model, we don't have that office anywhere because that model locks you into certain sort of ways of doing things. So, for example, if you're if you're working 2 jobs or you're that nurse working night shifts or whatever, you know what you don't want to do when you're closing a home? Go into an office across town during office hours to sign a stack of papers, right? And so that's about that convenience of, well, do they want to sign electronically? Would they like us to send a closing agent to their home? Would they like to do that on the weekend? The first question in many markets that we operate in, the first question that we ask people is, what language? What's your predominant language? Do you want to talk to someone that speaks Spanish? Do you want to talk on the phone? Do you want to talk over email? I think a lot of times there's a huge amount of information asymmetry in real estate transactions, and what you can do to break down that information asymmetry is really important, and operating at a larger scale beyond that sort of local office allows you to do that.
Yeah. Those are great examples. And another is, there is information that now is available that historically hasn't been, that can also help identify where traditionally underserved borrowers or potential homeowners haven't been served because they haven't fit within the narrow, well-defined sort of traditional path, whether it's on income documentation or sources of income or sources of creditworthiness validation. And I think that's another area where folks on the front end are able to capture more sources of data like rental payments that maybe typically haven't shown up in the consumer report, or other indicia that a underserved potential homeowner has the ability to make recurring payments with regularity. It's just not reflected in the traditional credit report. And likewise, being able to accommodate gig economy work, supplemental income that, again, doesn't show up on a W-2. So the model has been built around these sort of traditional pathways. And I think, again, innovation can both capture that information, and then strong data and analytics, and you'll hear from our chief data officer in a later panel, can help create confidence in the capital markets that that's an equivalent risk for me. It's a different way of looking at it, but I'm still going to provide this liquidity at an affordable price because I get it now. Fannie Mae can demonstrate that this works for us too.
So that last comment, Terry, about, this is a different approach, we have to assure people that this will work, leads to my next question for all of you. What are some of the obstacles that you might see in, not just with what you're all doing, but just with innovation in general, adopting technology in general in the industry? What are some of the obstacles that we need to be working together to overcome?
I thought the last panel was great to hear them talk about policy, because I think as much as we reduce the cost of the transaction, ultimately it is a lack of supply, and that is really hard to break up. I think everyone in Seattle gets worried that Seattle will look like San Francisco, which has not been able to break the gridlock of getting enough supply. And so I think it's really commendable that Seattle's taking those steps as they talked about permitting. I think, I loved what Terry said about appraisals. When we look at, we're really with Redfin Mortgage trying to shrink the closing process. It takes 30 days on average right now. We think it could be 10. That would just save a lot of time and let people move in really quickly. And appraisals are usually the longest point, right? And today, it still involves a human being who probably can't afford to live in Seattle, coming in and looking at the houses. And we just have so much more information about houses. So it's great. I think Fannie Mae has a huge role in that because they underwrite so many of the mortgages, as they can change the rules and say, we'll accept that, whether it's digital closings or different types of appraisals, all of that. It really frees us up to do those things. I think on the RedfinNow part, one of the policy things that we run into with affordability, we operate in Dallas, in Riverside County, where homes are more affordable. And there's a rule where if you're a FHA buyer, you can't buy a house within the first 90 days of it changing hands. And that means when we have a RedfinNow house, because we are kind of fixing them up, but that only takes us 30 days, and we're listing them 30 days later, those FHA buyers can't qualify and buy the house. And so we'll get a lot of offers in that first week, and we'll have to deny them. And then we'll often sell our best houses. And then if we haven't sold it 60 days later, then an FHA buyer can come around and buy it. But they can't get that first dibs on kind of the best houses. So that would be a blocker that we feel in some of those markets we'd love to be able to work around.
Okay. Anything else?
Yeah, I definitely think there's a whole range of regulatory and compliance issues that act as, sometimes they feel unnecessary, but they kind of do a job. Sometimes they're just antiquated and are unnecessary. I would say, though, that there's so much low-hanging fruit in this industry that I would say the biggest barrier to giving consumers more access to better services, better deals, is entrenched interests, fundamentally. Like, I think there is a lot that we can be doing, and there's a lot that we can, companies that if they decide to do, can do quite easily. But 10.4% transaction costs, people are making a lot of money in real estate, and I think in these superheated markets where things are very competitive, and you have gatekeepers that are able to essentially force buyers into this specific type of transaction, provided that there's demand continues to outstrip supply, then these entrenched interests will be the biggest barrier to the adoption of new models and new technology.
I echo what Patrick said about regulation and legislation. It can be an impediment. I mean, real estate transfer is still a local game and in a very antiquated process that harkens back decades and maybe centuries in some places. And you can only do so much within the construct of those pathways, those existing constraints. And so that will be a challenge. There's also at a federal level, there are regulatory impediments. I mean, one area that is a challenge is to comply with fair lending laws. If you can build an algorithm based on past data that will tell you what loan will perform and it's a magic black box, unfortunately, when your regulator comes by to say, show me that each element that you've used is non-discriminatory, or if it is, that there's not a less discriminatory criterion, you can't do that and accomplish that. So I think it is, and it's important that it not be a black box, that it ultimately be a fair system as technology is employed. But I do think that that's an impediment that exists in our world that maybe doesn't exist in other commercial contexts.
Okay, so as we start wrapping up, I want to follow up on something you said, Terry, and focus on or spend a couple of minutes talking about a technology that we've all heard of, blockchain. Yeah. And I think most of us know that in the context of it's Bitcoin and it's the underlying technology for cryptocurrencies. But you hear a lot about how that can really transform, for example, the title insurance industry. So what are your guys' thoughts about blockchain technology? Is it real? Is it going to happen? How long is it going to take? Where are we with that?
I mean, it excites me. I think it holds a lot of promise, but I think it's a ways off, for distributed ledger. I mean, look, the mortgage process, as I said, and the home transfer process is dozens of individual pieces of information and validation sets. So the prospect of having a reliable, immutable, distributed ledger that can be relied on for that is really exciting. The trouble is all those pieces are coming from different places. So there's not a silver bullet that puts it all in a neat little package. So I think you'll see incremental use, just as we are in other parts of the industry of distributed ledger, that 5-10 years from now we'll be able to point to things that are being done through blockchain, but it's not going to be sort of ubiquitous in a big bang that changes the entire process.
I agree. I think I view blockchain as a tool, and just like any technology, it's a means to an end. But ultimately what customers are looking for is a simple and stress-free experience. And that may help with privacy, with other issues, with transparency. But ultimately, there's still 9 or 10 different players in the transaction, and maybe that adds some transparency, but how do we actually make that more consumer-facing? Our approach at Reali is to actually vertically integrate, and similar to Redfin, and we're actually, our vision is to have every single one of those entities under the same roof. So when you're a home buyer or seller, you deal with one person, and you have a quarterback, and that person will actually facilitate all that. And maybe we have blockchain or other privacy technology behind the scenes, but ultimately we need to provide an experience to a customer that is seamless. And how we accomplish that, they actually don't care as long as we accomplish that.
Mm-hmm. A good way of thinking about what's possibility for a good application of blockchain is, when do you have to trust someone? When do you have to put trust in a person or an entity that you don't really want to trust? And so I think there's a number of areas there's a number of areas in and around the real estate transaction and financing process where you don't really want to have to trust people. We saw some of the really bad behavior of the banks in 2008 and 2009, where in certain markets people were foreclosing on homes that they didn't properly complete an assignment process on, and whether or not that was willful or out of the the abundance of misadministered loan documents, essentially, that was an area where this lack of clear and transparent custodying of assets really harmed people, and I think really earned the right for consumers to mistrust those entities dealing with the custody of loan documents. So I think that's a really, really important area. I think a lot of people, when they talk about title insurance and blockchain, they think about property records and they think about, well, that's archaic and that's where a lot of the costs are. That's absolutely true, except in the grand scheme of things, a county or a local government is actually not a bad body to have to trust, right? And so the problems are around the database technologies, they're around the way we enter and extract information, the way we think about risk in the transaction. These are all areas that are absolutely fertile for innovation and for developing new techniques and continued investment. But that's where I agree with you. Blockchain is a tool. Whether or not it's the best tool for that use case, to me is an open question. But yes, we absolutely need continued adoption of better database technologies and so on.
Mm-hmm. So to finish things up, a word that we heard several times during the course of this discussion is trust. And consumers, I think, are going to continue to need that human touch, that trusted advisor, the realtor, the other participants in the transaction. But how do we just smooth things out a little bit and try and wring some of those costs out? So thank you all for your participation and your great comments, and have a great rest of the day. Thank you. Thank you.